Video from 10x Investor Education. In this video today I would like to talk about one of my favorite penny stock. The company name is Avinger Incorporated AVGR. Okay, so let us see why I wanted to talk about this company. Today Analyst, one of the main analysts, upgraded the stock to buy and set a price target of $2.50. The stock was trading literally around $1 for months, and it was going up like 2 cents, 3 cents, 5 cents like that, and now today jumped up by 25 cents, which is like close to 20%, 21% today, and volume went up by close to 10 times. Okay, so why, how many stocks I own, when I bought, and why I like this company, and what are the risks, what are the loans, what do they do. Let's get into the details of this company in this short video. Avinger. Okay, so Avinger is a commercial stage medical device company. Okay, so it's a medical device company, that's clear. Okay, so the company designs, manufactures and sells image guided catheter-based systems that are used in treatments of peripheral arterial disease, okay, known as PAD. So I know I talked about Senseonics before, Eccentrics before. So those are, Senseonics is into diabetes, Eccentrics is actually into medical robotic surgery. Okay, this is about into PAD, peripheral artery disease, basically vascular device company. So it's a commercial stage medical device company, which means actually they research, they get patents, they come up with a lot of devices, they market and they sell those devices. Okay, so the company manufactures and sells a suite of products in the United States and international markets. So they are expanding like crazy and they are selling them like crazy. Products include its Lightbox imaging console, okay, catheters. This is the main source of income, I believe, to allow physicians to penetrate total blockage in artery, known as chronic total occlusion, okay, known as CTO. A Pantheris in image guided, okay, another big device that they're trying to sell is in market of atherectomy. So I'll let you know what is atherectomy. An image guided device which actually can remove plaque from your blood vessels, arteries. Okay, remove plaque from arteries. So in PAD patients, which is peripheral artery disease, basically people who have heart problems, whose plaque has built up in their arteries, instead of doing angioplasty, this is another procedure that they can do, which has some benefits. So, and also their platform, their tools offers a real-time visualization inside the artery during PAD treatment, which is one of the most important thing. Okay, so this is Avinger. Our story basically is a vascular disease and which is not going away, and PAD is increasing every year, and it is increasing almost in all the countries. So just like diabetes, this is also a long-term problem which will not go away overnight. So the market keep growing every year. Okay, and you know their main products, as I said, all these described. This is one of the Tiger Eye, which actually got recently FDA approval close to I think 6 months or 8 months back, and actually this making ton of money in my view for that company. Okay, so okay, so going back here, so who are the market leaders in this? Okay, peripheral vascular devices, right? So the prominent players in this PAD market are mainly Medtronic, okay, which is Ireland based company, which is also public company, which trades in Nasdaq again. Also Boston Scientific Corporation, which also trades in US, and Abbott and Cardinal Health. So these are the one of the main companies in this market. Okay, so when compared to Avinger, these are huge billions of dollars of companies. So in a long term, I don't think Avinger will stay as it is certainly going to be a takeover target for one of the big companies to merge with their products. I think that is going to happen, but I'm not sure. Okay, so what is atherectomy? So atherectomy is minimally invasive technique for removing. Also, this is basically atherosclerosis, means basically plaque in your arteries from blood vessels within the body. It is an alternative to angioplasty, which is very famous for the treatment of PAD. Okay, that is what atheroctomy means. Okay, so this is their last quarter results, which actually came out just last month, and I will give you brief overview. And the quarter was not bad at all. So I was about to sell off the stock, but I kept the stock because I see the market potential for this company. So if you look at here, they missed it by 1 penny, but revenue was decent. So if you look at closely, it's a 2.6 million, which is close to $13 million company revenue wise, and they beat the revenue by 110k. But if you look at it, it's just a $130 million company. So if you look at Senseonics versus this company, I think this company makes more money, whereas Senseonics is $1.7 billion company. Okay, are you hearing? So Senseonics is $1.7 billion company. This is a $130 million company. So I think this has long potential. The only difference is Senseonics is in the diabetes market, which is very, very huge, and it actually goes to end consumer, which means millions of people. Okay, so this is doesn't go to end consumers, but this actually sells to hospitals and doctors. So they can't sell in millions like Senseonics they can sell. Okay, so that's the main difference. But still, I think compared to Senseonics valuation, this company's valuation is a lot less and lot cheaper in my view. Okay, this is not profitable, there is PE, but that's what I think it is. Okay, so look at this is okay. So you guys know or not, this takes a lot of time preparing all these tabs. Okay, and getting the summary of the results. Okay, so please, if you are following this video, please click the like button for YouTube stats, and please do your own research before investing into this company, because I am not your investment advisor. Okay, so please do your own research, but I will show my position, why I bought this stock, and then why I keep buying when the stock dips. Okay, so if you look at here the financial results, I'll quickly go the summary of finances. I mean, a lot of positive things, like how many equipment they are selling, how many salespeople they are hiring, and how crazily they are selling, how crazily they are growing, right? So that's all good news in this call. Okay, so look at financials. Total revenue for the first quarter of 2021 was 2.6 million, which is a 13% increase from the previous quarter, from the first quarter of last year. Okay, not previous quarter, last year, which I think decent rise in year over year, which means they are selling more equipment. Okay, so and also, and a catheter, which I told basically, which is a lot of sales they make, is almost 4-year high, which is robust demand for Pantheris SV and Tiger Eye. So these are the two major devices that they got up FDA approval, and they have been selling like crazy. So gross margin first quarter was 35%, up from 22% from the last quarter. Okay, so if you look at here, this is most important. They certainly have some debt and some loans. Okay, so but there is nowhere close to a bankrupt, even though it's a penny company. Reasons, because remember, I only invest companies, penny companies, that have very low chance of bankruptcy, which can sell their stock and raise money and almost no debt. Okay, that is where my target is. So operating expenses for the first quarter were 5.5 million, which is close same as last year. Okay, maintain lower operating cost profile prior to prior to the COVID pandemic. Okay, so net loss attributable to 5.1 million. Okay, so which is close to 5.5 million. Okay, let's see. So how much cash in the bank? Okay, so cash and cash equivalents of total 30 million. Okay, from March up from 22 million. So they actually increased the cash because they did a offering in February. So which is 2.3 million offering in February. Okay, so they basically had a strong quarter, and they recently have close to if they're spending 5 million per quarter, they can run for almost 1.5 years with this money. And I'm pretty sure they will do another offering anytime soon, because the stock is up almost 30% in last 2 months, and they will use that money to beef up the balance sheet. Okay, so the best time to actually buy this kind of stock is when they do an offering and the stock price goes down by 20%. That is the best time to get into this kind of stock or add more stock of this company. Okay, so this is about last quarter financial results, which are a lot of positive things I can see. Okay, so other thing, as I said, was let's get into some of the other good things happening. Okay, so as I said here, Avinger shares are trading higher. B. Riley Securities initiated coverage on the stock with a buy rating and price target of $2.50. Okay, that stock was just a dollar stock and it doubled the price target, and there was no price target, so there was hardly any analyst coverage on the stock. Okay, but the stock heavily bought by big institutional investors such as Vanguard and BlackRock. So that is another confidence factor that tells you that this is a decent safety stock. So if you look at here, the analyst coverage, okay, so it is just one buy rating. Mark Wiesenberger, okay, who is rated 4.5 star, he's setting it to $2.50 just a day ago. Why did he change the rating right now? Let's look into that. Okay, so if you look at this guy rating, he is 187 ranked in 7,600 analysts. Okay, 69 out of 94, which is close to 75% ratings of successful, and the average return is really good. Okay, so a lot of companies he ranked went up a lot. Okay, first of all, and this is success rate is 74%, is really high, and his ranking is really high. Okay, if this is a 2-star analyst and is not ranked well, I wouldn't care, but in my view, this upgrade has a lot of value and a lot of potential, and that's what I think. Okay, so going back here, so let's look into some of the news that's happening. So the main reason for the analyst to actually upgrade the stock was, I think this is the conference that happened yesterday. Okay, so cardio conference, vascular conference, or that is where this company has been very proactive in presenting almost in every conference related to vascular or cardio, PAD conferences. Avinger announces key opinion leader presentation at vascular conference, which you can get into the details here, but the summary is basically there are a lot of these doctors who are using these catheter equipments gave a very positive feedback in these conferences, and they are presenting. That is really the factor for the analyst to upgrade and the stock to go up today. Okay, so going back here, I'm not sure why it's showing. So Avinger announces presentation by key opinion leaders at a new cardiovascular horizon annual conference. So this is just like 3 weeks back, the conference, and this conference is just like yesterday. Okay, so as I said, they have been presenting in these conferences heavily, and Avinger to present in Oppenheimer MedTech Tool Diagnostic Summit May 26th. Okay, so they also presented in this conference. Okay, so as I said, 3 conferences in a month almost. Okay, so Avinger achieves commercial milestone with more than 100 accounts using Pantheris. So basically shows that they have achieving their sales target very aggressively, and they are able to sell their Pantheris equipment to 100 accounts. Okay, so going back here, we look into peripheral vascular devices and market overview. Okay, so this is very depth. I don't want to get into detail, but the summary is, what is this arthroscopy and arthritis? Okay, so atherosclerosis, that is what it's called, is basically atherectomy will be, this is Cleveland Clinic website, and briefly describes, as I said before, the surgeon will insert their catheter equipped with a sharp blade and tip device, and it will penetrate through the artery until it reaches the area of narrowing. Your surgeon then will scrape away the plaque in the catheter blade. Okay, so basically you use this catheter blade and remove the, scrape it up the plaque. So that is how they remove it, this plaque. Okay, so this is the, as I said, Boston Scientific, Medtronic, which are big players in this market of atherectomy and catheters. So this is a very small tiny company. I really doubt they will stay as themselves for a long time, and this could be easily takeover target in my view. Okay, so let us look at volume, who owns this stock a lot. Okay, so this is Fintel, where you can see institutional ownership of the stock. Okay, so this institutional ownership, as you can see here, a lot of is owned by, millions of stock is owned by Vanguard, part of Vanguard Total Stock Market Index, Extended Market Index, and also T. Rowe Price recently, Schwab, and lot of big companies, Morgan Stanley, Charles Schwab. Okay, so this, for example, if I click on this one, I get to this page where it shows that Vanguard Total Stock Market Index actually reports that recently they increased the stock of this company by 195%. Okay, so that's like almost triple the what they used to have. Okay, so as I said, this volume of the stock is usually 2.8 million, and today's volume with this upgrade and the news from the conference went up by close to 8-9 times, which is close to 23 million shares traded today, and stock is actually went up by close to 22%. So okay, do I own this stock? Okay, so as I said, first of all, I usually do not make a video or recommend unless I own the stock to some extent. Okay, so this stock I have been following, and I wanted to take a video until the right time, until there is an upgrade, to make sure this is the stock that I want to hold long term. Okay, this today's rating from a top broker or analyst gives me more like strength to hold this stock for long term. Okay, so that is the reason why I never sold this stock. So this stock, close to 2,500 shares I have, and I bought it around 62 cents, and the right now it's trading around $40, which is close to 125% return in few months, which is not bad at all. So I never sold stock, and I just bought the stock in lump sum. Okay, so one thing you need to remember is this doesn't have options, as you can see. Usually I never buy a stock, a penny stock, without having options, because there is no way you can hedge to take some profit out of it. If you look at Senseonics, I can sell $10 covered call for next year, and I can make 20-30% premium. That's how you can reduce the risk by selling off some of your profit through covered calls, reducing the risk. Okay, so this doesn't have options. It might get options based on volume, but I'm not sure. Okay, so even without options, I bought the stock at 62 cents, taking a risk because I believed in the potential of the company and the market of vascular PAD market. Okay, so will I buy the stock at this price? Probably not. Okay, the reason is because with the price increase of almost 40% of the stock in a month, they are going to do an offering, which probably will happen at around $20 or $30. So I think I'll get a chance to buy again at a much lower price in my view. So today is not the best day probably to buy, but I'll keep an eye, and whenever there's an offering, if the stock comes to $1 to $1.20, that is a really good time to buy, add more to my position. Okay, so this is what my opinion on the stock. Again, this is not investment advice. As soon as the company announced, the analyst announced the price target, I actually tweeted on my RK10X investing, where I tweet few times, so you can follow there. That is the best way, because the video takes a lot of time, putting a lot of documentation and lots of research, whereas tweeting takes a minute as soon as I knows. So best way is to follow my tweet account. And also please click the like button and let me know what your opinion on this stock, whether you like it, whether you like this market, and whether you really wanted to buy at the stock at this price. Hopefully you like this company, hopefully you like this video, and please see in my next video. Thank you.